Hi, I am Ajay Tyagi, Head of Equity at UTI Mutual Fund and the Fund Manager of UTI Flexi Cap Fund. Today I wish to discuss the investment philosophy of UTI Flexi Cap, its wealth creation potential and its role in your portfolio. UTI Flexi Cap follows an approach of identifying businesses that create economic value and have an ability to compound this value over the medium to long term. Essentially, our performance is predicated on identifying and patiently holding on to right kind of businesses through the cycle. We focus on the outcomes of businesses over the medium to long term rather than trying to predict the stock prices of these businesses over the short term. As a consequence, we avoid looking at the macro variables to construct our portfolio or indulging in sector rotation or chasing momentum. This long-term approach of ours is reflected in a very low portfolio turnover. Talking about the investment philosophy in detail now, UTI Flexi Cap's philosophy is built around three key pillars, namely quality, growth and valuation. Quality signifies the ability of a business to sustain high return on equity over a long period of time. We believe that businesses with high ROEs are able to generate strong cash flows, and these strong cash flows become the source of economic value creation. Growth, on the other hand, signifies long-term secular growth potential for businesses. The fund emphasizes on businesses that have a steady and predictable growth rather than the ones which may have a cyclical or volatile growth. Finally, valuation parameter not only focuses on price to earnings multiple but also price to cash flow, which we feel as an important guiding pillar as these cash flows are the real source of value creation in businesses. We also consider the discounted cash flow method of valuation, since this methodology better captures the earnings potential of high growth businesses. We steer clear of businesses with consistently low return on capital or inconsistent cash flow generation, as these could be the source of patchy wealth creation. The strategy is bottom-up focused and not driven by views on macroeconomics, geopolitics, sector turnarounds, etc. However, the fund invests across market capitalization and lays emphasis on buying high-quality mid and small caps which have a long growth runway. So finally, what's the role of UTI Flexi Cap in your portfolio? As compared to the benchmark, which is Nifty 500, the fund endeavors to maintain a superior profile on fundamental parameters like growth, return on capital, cash flow generation, and leverage across market cycles. We feel UTI Flexi Cap should be a core holding for investors on account of high quality nature of companies that it selects and very patiently holds on to, thereby capturing the wealth creation by such companies over their life cycle. Thank you very much for your patient hearing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.